All right, so we're going to continue talking about budgeting and working our way through uh, talking about the four classifications of revenues. We talked about compulsory, which is dealing with taxes and tax dollars that are collected by the government that are oftentimes used to help recreational sport. We finished up our last video one, budgeting video one, talking about earned income and realizing it through fees and charges. We'll provide you a service, and in this case, the sporting events, but you're going to pay for it. We're going to make a profit off of it. We want to make money off of it, and so that's another way that we can do that. And it takes different forms. It might be anything from entrance fees to getting into a tournament to getting into a facility, uh, admission fees, rental fees, and rental fees being facilities, and they can have open play and come in and use your facility, but they're going to have to pay for it. User fees, sales revenues, whether it's merchandise, as far as souvenirs for the event, we can create sales revenues as well. Other classifications for revenues, contractual agreements. Contractual agreements are revenue that accrue as a result of a legal agreement between Parks and Recreation agencies and other parties. But they could, I put Parks and Recreation agencies, but they really could be any type of agency working with another agency where they sign into an agreement. A lot of times what happens in government or Parks and Recreation agencies, they may sign a deal with an outside entity, and this is becoming more common where we'll manage the field as Parks and Recreation for the city. We'll manage the fields, but we'll have some other agency come in and actually plan the activities that take place on the fields. So our job is Park and Rec is just taking care of the fields. Other agency will come in and do the actual programming. And the nice thing based upon that is Parks and Rec will get part of that revenue that's generated come back through contractual agreements. You see this more and more concerts in parks, and the Parks and Rec provide the space, and outside entities will do the programming, collect the proceeds, and then share those contracts with you. And this also happens too with we talked about contracted employees, where you might sign an agreement with somebody to come in and handle concessions for you. You don't want the headache of handling concessions. You don't have the background in it. We'll pay somebody, or we'll allow somebody else to come in and do it, and they'll pay us part of their proceeds. And we don't have the headaches. We just collect a check. So this is a common area where agencies will combine their resources and help generate revenue. And then lastly, the financial assistance, and that's kind of the sponsorships we talked about, donations. It could come from grants. If you're working like a voluntary nonprofit organization, you might get grants to help support it. Looking at some of those programs we talked about earlier in our time together with Sport for Development and sport as a means to keep children out of trouble and jail and those type of things we talked about. You might get grant dollars to, if you can show that that's one of the purposes of your programming, this sport programming, and actually assess that and show that you do have some positive repercussions there of their grant dollars going to your event or your events and your programs, and showing that they do have that positives. Okay. So classifications, four main classifications, depending upon what type of agency you work in. Some will be more feasible than others, but just want you to be aware of this is where those areas where revenue will come in. Types of budgets. So really when you get out there, you're probably going to be faced with two types of budgets. There's other types, but really these would probably be the most common that you'll come across when you're going out and doing your budget. And this line item budget is the most common. It's the way most budgets are formatted, is basically every expense has kind of a classification, and that classification is oftentimes numbered. And if you work in a large organization like, let's say, Conway or Myrtle Beach Parks and Rec, where you're part of an overall city, those line numbers are going to be the same no matter what agency that you're working with uh, within that organization. So you might be working with, um, you might have similar costs. I'm trying to think. The police may have similar costs as the fire, and the fire has similar ones as you in Parks and Recreation, and they'll all be numbered the same way, so that the overall budget will show how much they spent in this particular area, whether it's marketing or whether it's supplies or whether it's equipment or whether it's uh, dry cleaning, whatever the case may be, so that it keeps it a continuity across all the programs. And we'll show that here in a second, so that you can get an idea and look at a line item budget. And then the other type of budget that you should be aware of when it comes to kind of events and running tournaments is a program budget. So a line item budget is kind of the way that you'll format your budget, and then a program budget is basically for every program that you do, you have to create a budget. So you're documenting what costs are going into that particular. So those direct costs that we talk about, that's really the program budget. If you generate costs that come from that or based upon that event, it would be lumped into that program budget. Okay, and you'll format it with a line item budget. Okay, so a line item or object classification identifies the cost of a particular function and then associates it with a budget classification. So think about what cost that you might have when you run an event. You probably have some marketing. You'll probably have some personnel, whether you're hiring staff or you're hiring officials to help you run your event. You'll probably be paying for supplies, whether it's trophies or those external rewards that you might be providing. Equipment like baseballs or basketballs or whatever the case may be. So you're supplying those. You're going to need those, and it's going to be associated with some line item that's there. Okay, and one of the things it tries to do is it attempts to standardize those classifications. So if you're in a large organization that's responsible for sport tournaments, you may have tournaments in volleyball and basketball and lacrosse and baseball and 7-on-7 football. So you're running all those different events, but you want those items in the budget to have common classification, so that even though it was a lacrosse tournament, this certain numbering system means that it was spent on marketing. And then you can look at how much overall that you spent on marketing within that agency. Okay. So classifications, they might have personnel, supplies, equipment, marketing, some of the common things that you might see. Okay. And I'm going to pull up a line item budget here for you so you can take a look at one. This is a line item budget that we did with North Myrtle Beach, and I'm trying to, and the budget code over here on the right. So budget starting balance, and this was 743. So 743 tells whoever's doing the budget that 743 is the programming side of Parks and Recreation. And then the 111 is materials and supplies. The 111, no matter what department in the city of Myrtle Beach, that 111 is going to be materials and supplies. 130, contractual services. We know here, just looking at this, it's contractual services for Parks and Recreation in the programming side. And so we just kind of create the budget of how much we're going to spend for that particular event. So we budgeted for this. We did our original budget. We budgeted $4,998.17 after we did our research. The total that we spent for the items came out to $4,438. So we had a little buffer there of $559. It's always good to have in case you go over, which you'll see here in a second. We did. Okay, and then you can see the next is contractual services, billboard, awesome inflatable. We had a magician that cost us $220. You can see how much everything costs. Porta-johns. We spent $305 on porta-johns. Okay, so on this side of these contractual agreements that we signed contracts with these organizations, we spent we budgeted $2,500. We spent $3,500. So we were over $900, almost $1,000. Now we had a buffer there a little bit from the other one, but we're still looking at in the negative there. And in this case, we had some advertising, the town planner, and flyers. We spent $288 there. We had budgeted $260, so we were again down $28. So we spent about $8,251, and our budget was $7,800. So we were over budget by about $400. Okay. Now looking at again contractual agreements, and this one was the materials and supplies. When that budget gets entered into the overall system, whoever's in charge of the budget for the city will know this came from Parks and Recreation and this went to materials and supplies. Okay, that's a line item budget, and that gives you, and this is a line item program budget because this is for Howl-O-Scream, and this gives you an idea how much money we spent, how much we budgeted for it, and how much money we spent on Howl-O-Scream. Okay, and so line item program budget. All right. And so looking at, again, and like I said, line items often combined with other types of budgets. So we did a line item program budget. But the one thing that a line item budget will do is, and then you'll have to combine all the programs, all the services for Parks and Recreation, and get the total line item budgets for each one of those, and then it'll be lumped into the overall agency or organization, in this case the city of North Myrtle Beach. Okay. And then the program budget is just all those, cluster all the costs necessary to create that program. How much money do we need to create that program? And that's what a program budget will do. Oftentimes, like I said, recast it, use it with a line item budget. We showed you that one. So one of the things we talked about is, we talked about generating revenue. And so one of the things we always have to keep in mind when we're doing this and looking at kind of the fiscal management side of it, of our events, is pricing strategies. And how do we go about pricing our events, in this case those are our sporting events, so that we potentially could make profit or at least break even depending upon what our purpose is. So one of the ways to do it is cost recovery. So the goal here is to break even. We just want to cover our costs. So a lot of times Parks and Recreation agencies within the cities, or their goal is, let's just break even. We just don't want to lose money. We want to break even. So that's cost recovery. So let's look at how much money was going out to create the event, and we'll set our price based upon that to try to just recoup our expenditures. Okay? That's one strategy. Another strategy is markup. And markup is just cover the cost plus a percentage. So you might say, this is what it would cost to cover it based upon this number of people, and we'll add on an extra 10% because then we'll make 10% profit on everybody that buys it. So our pricing strategy is just a markup. We're just going to put a certain percentage, 5, 10, 15, 20%, and we're going to use that to help us make a profit over our expenditures. Okay. I'm running out of time here, so I'm going to